Hey everyone, welcome to the KE Report, another daily editorial. This time we are chatting with Matt Badiali. Matt is the editor of the New Energy Investor, published under the Mangrove Investor brand. I will post a link to the Mangrove Investor website so you can follow along with Matt's letter. Now, Matt, as we usually do, we'll talk critical minerals, and there's some news for us to talk about after President Trump signed that executive order to more or less fast track critical minerals production in the US. It was a wide range of metals that were included in that executive order. More or less, just curious what stood out to you for this executive order and what actually you think can be done on the government front to speed up some production of these metals that they isolated.
Yeah, it's very interesting. It was a wide range of metals. Unfortunately, I'm probably going to be in the minority here because I kind of feel like it was more performative than anything. Because like, unless and until they change the actual boots on the ground regulations, and those are laws, the permitting guidelines, that sort of thing. It's more of a signal that the federal government is on board with more of that. But, I don't know how that's going to change the grind. And it's not just the states either, by the way. You saw the Canadian government waived their review at the federal level of new projects. I think that actually will have a substantially larger impact on getting stuff built and developed than the executive order will. But, I think more than anything, this will help capital come to the sector, right? Which is what we're needing right now in the mining space. You need investors to be aware that we actually do produce these metals from mines. And when you have the or at least the president saying, hey, we need more of this, it should focus some attention on mining, which is very good. Where the rubber meets the road, I don't think it's going to have an immediate impact. The more immediate impact is the reaction of the markets. We saw many of these stocks, share prices have jumped a lot, maybe too much on this order. So,
Well, Matt, just to that point, there are some timelines in this executive order that I guess technically are a law, and it's pretty aggressive. Some of these things are, within 10 days of this order, the head of each executive department has to review their permitting, and then in 15 days, and there's another thing at 30 days. And so there's a lot of, things about the land use, and with 30 days of this thing, the Department of Agriculture, how does it affect forest service land? So I think a lot of people as a broad swath saw that there's a lot of minerals that are mentioned in here, even including gold, and that there's a lot of things about permitting. But to the point you just made, a lot of the permit plays, the ones that have been in perpetual permitting hell, have all had big runs. You put out a great article to your subscribers about Northern Dynasty's Pebble project, but we've seen the same thing with Trilogy Metals project, their Rambler Road access. We've seen Ambler Road access. We've seen the same thing with the Resolution Mining, that's Rio Tinto's project in Arizona. So the permitting plays are back in fashion.
yep. And, the timelines are great, but it isn't a law, right? This is an executive order, but the regulations, we have to see what actually happens. I'm not sure that just simply by the president saying, hey, you need to review this stuff in 10 days, that it's actually going to happen. But yeah, that resolution mine, I mean, that's a giant copper project. And it's Arizona, kind of for the industry insiders, it was kind of a mystery as to why this wasn't getting permitted. Rio Tinto is a big company with big clout. So of all the mines, of all the projects that we just mentioned, like I think Resolution may be the one that comes to fruition the fastest. You have Pebble and Resolution are like Pebble is a big copper, moly, and gold project. I think Resolution is just copper, if I might be wrong. But with the other side of this coin being that the government is slapping a 25% tariff on copper imports. Now, that is a huge hit to consumers because copper's in everything. And so if you say on the one hand we're going to tax any copper import, that's a further incentive for people to permit these mines. The problem with all of these is that it's partly political will. And I think that what we have to see is certainly for Pebble, like you had the governor and the two senators for the state um, have come out against developing Pebble because the backdrop of Pebble is a multi-billion-dollar salmon fishery. And so these guys, it's somewhere on the order of 1,500 jobs created by the salmon fishery versus, you know, this mine. So I just don't know. That's no matter what the president says, that one's going to be fighting all sorts of headwinds. In Arizona, it may be easier to get this project through permitting, but like permitting takes years. And so, I would point to the Keystone Pipeline as a parallel. We all thought during the last Trump administration that, oh shit, of course that's going to get permitted. And it didn't. And it didn't get permitted during the Biden administration. And so we're back to Trump. And he's clearly an oil guy. And this isn't even the Keystone Pipeline is just debottlenecking. Like, it's not like you're bringing new oil from Canada to Houston that would never make it there in the first place. This is just like widening the lanes of an existing highway. So again, you have this crazy policy that doesn't make a lot of sense. Yes, it's going to cross lands that are sensitive. Yes, we've done that many times in the past. Yes, we can mitigate risks. So why doesn't it get built? So I'm kind of keeping my finger on several of these projects because, like I said, there's a, and I know that there are going to be a lot of people who are going to write you hate mail for me saying this, but, this administration is known for talking a big game, but not really getting stuff done, not nearly as much as they think they will. So.
That's a funny comment to make, Matt. Hey, they're trying. It seems like they're doing a lot in the first 3 months here, but you are right. It's a whole lot of volatile behavior that we just don't know where the end goal or the end game is because so much focus now is on US or broadly North American assets. There's a lot of assets out there around the world. Do you think that there is still opportunity outside of the US and Canada in terms of critical minerals projects, or should we be more focused in North America because of what's come out of the governments and, well, because I guess people are more focused in North America right now?
Yeah, I mean, this is hard because minerals happen where they happen, regardless of your politics, right? And so there are areas that are heavily endowed with some minerals. In the US, we are fortunate that we have this massive ancient ocean basin that is full of oil in Texas, the Permian Basin, full of oil. So we have way more oil than we need. And so we're able to produce plenty of oil and then sell it in the market to the rest of the world. Copper and a lot of these base metals, they don't necessarily occur in abundance in the US. And so uh, it's going to be, I still think it's going to be worth developing and looking for property projects outside of the US and outside of North America. But by the same token, if you think that these tariffs are going to last, if you think that America is going to become isolationist in terms of its consumption of minerals, we know that we're probably going to have 3 more years of this, we think, then yeah, it's going to be worth looking for this stuff in the States. And I think you're going to see a lot of attention focused on areas that haven't had attention in mineral development since the 40s and 50s and 60s. There's a project called Brewer Creek that Carolina Rush has. It's in South Carolina. And that's an area of the Appalachians that has historically produced a lot of copper. Tennessee, North Carolina, South Carolina, into Georgia. It has an endowment of gold and base metals. It's an old failed rift system. It's a sort of place that is really interesting. It hasn't gotten a lot of modern attention because people don't want mines there. And so it wasn't easy to permit, oh gosh, Oceana Gold's gold mine.
Hail mine.
Hale, thank you. That one took a little bit of time and a little bit of effort, and it did get permitted. Brewer Creek or Brewery Creek is a really interesting deposit. They've had some pretty nice drill holes. It hasn't gotten much attention at all from the market. I think it's probably 5 million and 7 million market cap. But this is the sort of climate now with the political tailwinds coming out of the Oval Office that certainly should have investors looking at it. And, because we're going to need it if it's mineable. And it's a historic gold mine, so it's not greenfields. And there's a place called Ducktown, Tennessee, that is a super fun site. Pardon me. And it was an old copper mine. I think it closed in the 70s or 80s. But that's an area that hasn't had any exploration in decades. Like, so yeah, I mean, this could very well kick off a whole new focus on the United States mineral exploration that we just haven't seen. Some people have gone back into Idaho. Some people, they're still fighting a permitting battle in North Dakota. It was a rare earth platinum palladium project up there. This was an area of the world that, is it North Dakota or maybe it was Minnesota, that that had historically mined lots and lots of iron, but they wanted to get the state politicians, the people of that state wanted to get out of the mining business. So I still think that sentiment is at odds with this executive order, and it'll be a battle. So timing wise, I just don't know how. I don't see 2 weeks as reasonable, let alone feasible. And American politics changes every 2 years. So, we'll have to wait and see. But in the short term, yeah, I think there are some companies that are really going to benefit from the spotlight. As an investor, I'll be looking at that.
Yeah, Matt, it's really interesting to see. I think you were talking about the Minnesota, the Duluth complex, where they had the Duluth Minerals that Antofagasta took over, and also Polymet that's right next door to them. And
Polymet,
yeah,
I went to see that when it was they were just drilling it off. And they literally own an old iron mine, and Polymet was just a deposit that was next door. And they could not get that thing permitted. It's crazy.
yeah, and both those projects right next door, the Twin Metals project, which is held by Antofagasta now, was the one they thought was going to move ahead first. And so we'll see with some of those projects, or people are looking at California again and saying, hey, maybe some of these projects. So we'll see how it goes. But another thing that's in this executive order is there's a section in here, Section 6, talking about the government working with private and public capital using the Secretary of Defense and the National Security Capital Forum to try to facilitate private capital with these projects. And then there's another section in there where Trump is evoking the Defense Production Act to try to empower people to make loans, do grants, do equity investments, and offtake agreements. Do you think we'll see more funding hit these projects as a result of this executive order?
I do. I think that's the one area that I think you're going to see. And we've talked about this before. There needs to be a new source of capital. Like you just can't raise money. And now, all right, so historically, junior mining companies have been listed in Canada on the venture exchange. It's very difficult to list a junior, if not impossible, to list a junior on a US exchange. And so what you do is you end up going to Canada and raising money for junior mining projects. Best of luck raising money for a junior miner that's focused on the United States right now, in Toronto or in Vancouver. It's hard enough as it is, but the PDAC wasn't exactly a U.S. friendly location this year. There were lots and lots of Canada isn't for sale hats and shirts, and so that I think is going to be the most beneficial for both mining companies who want to work in the States and just for our sector in general, not just the U.S. focused ones. Like, we can't rely on Bay Street to finance all of the mining projects that we need. They're too cynical, they're used up, they're short-term thinkers, and mining is not a short-term thinkers investment arena. You can speculate all you want, but that's not good for the companies. The companies need deeper pockets, and they need people who believe in what they're doing. Those are the people that need to come to mining. They're the ones right now that are in tech, they're in biotech, they're supporting drugs. There's a shocking disparity between drug research and mining research, mining exploration. 90% of the drugs that come to market have been supported by government grants. 90%. I don't know what the statistics are on mining projects, but I'll bet you it's single digits that have any sort of government assistance in their exploration and development. So, you have to put your money where your executive orders are. And that to me is the best part of that executive order. And it says to me that there are mining industry folks that helped craft that, which is really important and really good. You have to have people the mining industry is so different and so difficult and it takes so much longer than anyone realizes to put all your pieces together. Like everybody says, are you drilling? Are you drilling? Are you drilling? Well, drilling is such a short, it's critical, but it's such a brief part of the timeline. The studies take forever, and your stock sits there while your team is putting together the data and trying to make sense of it. And all right, where are we going to go next? And in the mining industry, in our current climate, no news is bad news, right? It's like the clock is ticking, your share price is falling because nobody's heard anything from you, even though you can't say anything because that you have material information that you're trying to work through, that you have to get into certain order before you can publish it. It's a giant pain in the butt, you know? So yeah, this bringing smart money into this industry, or patient money, whether it's from the government or from long-term equity investors, is absolutely critical. So in my opinion, that is probably the best thing to come out of this, between the attention to the sector and the direction of capital. I think that's fantastic.
No, I completely agree with you, Matt. That could be the biggest turning point is if governments and other investors start actually funding these builds. We'll see just what kind of money flows in because, in all fairness, we have heard critical minerals, government setting aside capital, and it just hasn't really moved the needle for a lot of these companies. Now, as much as this has been focused on permitting, are there any assets out there, North America broadly, that you know of that have their permits, that they have been in a way just waiting for funding, and that could be a telltale sign if money is freeing up that these companies actually get some money either from the government or from different types of investors to build their assets?
Not off the top of my head, but I will give you an example of a company that I thought really suffered from not having adequate capital. And this is because I'm a shareholder and I do some work with these guys. But Heliostar Mining bought a project called Ana Paula. And Ana Paula is this gold mine in Mexico that had been permitted as an open pit mine. And then it just kind of faded out in Argonaut's portfolio for a lot of reasons, but partly because the economics just weren't great. And it was because they cut corners and tried to save some money by buying an old mill. And then they bought this mill because it was available and they thought they could save some money there. But then, because of the size of the mill and the scale of the mill, they had to tool the mine to the mill. And by doing that, they went with an open pit design, which ended up bringing in, because with an open pits look like a dish, where, an underground mine is a shaft and a cavern. An open pit is more like a dish. And so you ended up bringing in lots and lots of really low grade material early in the life of the mine. And so the margins looked terrible and it was just a bad design. They did that because they needed to save money somewhere. So they saved the money on the mill. And ultimately, they sold the project to Heliostar because they just couldn't make it work. And the key to that was the Heliostar geologist, Sam Anderson, you want to talk about knowing the people in the industry and following people. Sam Anderson, everybody out there, write his name down. If he ever leaves Heliostar, follow him because this is a smart geo. He looked at that asset and said, the way that they've built their resource doesn't make sense geologically because they drilled some of it, but they didn't drill all of it. They drilled enough to know that they could do this open pit. So Sam designed a drill program and went out and found a ton of crazy high grade gold. And the only reason that that you're not talking about Heliostar all the time as one of the greatest discoveries of the last decade is because it happened in the shittiest market we've had in the last decade. So Ana Paula is going to be an insanely high grade, very profitable underground gold mine. And they could do it that way because they weren't married to the mill that Argonaut was married to. And so it goes back to this idea of you can wreck a project, you can wreck the economics of a project by expediency, by making choices that have nothing to do with the rocks and have everything to do with your ability to raise money. And so that's a great example of what we see all the time, which is companies breaking their picks because they don't have enough money to do things the right way. And there are lots of innovations that might cost a little bit more in the short term, like when you're planning the mine, that will end up paying massive dividends down the road. So I think, and this is me as a geologist and not an engineer, talking well outside of my experience, but one of the big problems at Pebble, one of the hurdles that caused so much concern among the fishermen was that Pebble was going to put all of its waste into a lake, and they were worried about the water from the lake being contaminated by metals, getting into the fishery and contaminating the salmon, killing everything off. But we have technologies like paste backfilling that that eliminate the need for tailings dams, right? And tailings dams, you guys know this, tailings dams are the single biggest source of mining disasters that we've seen in the last 50 years. If you Google mine disasters, you're going to end up at Vale's massive dam failure. Or you're going to get, I think, wasn't New Afton a big tailings dam? That was a big collapse, maybe not a tailings dam collapse. But the San Juan River water pollution from an old mine, that's the problem, right? You've got to eliminate that. And if you can eliminate that, I think the permitting process will get easier because you can overrule some of the complaints. I think that would be one of the big steps that Pebble could take. Figure out how to eliminate that tailings dam. So anyway, if money comes to the sector, it's going to allow mining to change. And a step change in the way we approach mining is what we need. It can't be fun on a budget anymore if you're going to start having to build mines in places like, Tennessee and South Carolina. You need to be able to do it with the most modern processes available in order to eliminate the risks to the communities that you want to operate in.
Very good point there, Matt. You're absolutely right. And look, it does seem like the world is making progress towards being more mining friendly. That executive order is just one example of many over the last couple of years of governments trying to get behind critical minerals. We'll again see what actual rubber meets the road here with funding and with permitting, but it is at face value very positive for the sector. And again, we'll just see what gets built on the back of it, but there are definitely always trades available as the sector is still diverging from the broad averages. So, hey, Matt, great chatting with you as always. Again, Matt Badiali, editor of the New Energy Investor, published under the Mangrove Investor brand, which I will post a link to in the show notes. Matt, great chatting with you. Thanks for taking some time with us. I hope you have a great rest of your week.
Thanks very much, guys.